Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, October 21st, 2020. In this video, we're going to take a look at a handful of momentum stocks, some of the recent high flyers, crowd favorites such as Netflix, Zoom, DocuSign, and some others there. So we're starting out here. This is the ETF called MTUM, and that's the iShares MSCI USA Momentum Factor ETF. So you're just going to hold momentum stocks in there. And a couple things stand out. Number one, for the first time in a while, we put in a divergent high. Well, technically speaking, if you want to get very technical, it's what I call an ADH, or almost divergent high, because technically speaking, to have a divergent high on a stock or an index, you have to have either equal highs or higher highs, with the indicators making lower highs right there. So you definitely have the lower highs on the indicators. For all intents and purposes, you zoom in real tight, you have almost an equal high. I mean, we came up within, what is that, less than 1%. So again, you can split hairs if you want, but you can say those are equal highs. And then if you do look at it that way, that's your first divergent high on that ETF since all the way back here, right before the big drop. And keep in mind, momentum stocks, as the name implies, these are what momentum traders are in. And it's like a game of musical chairs. I always say, when the music's playing, great. Those are, they're going to just keep going up, up, up. They tend to defy overbought. They tend to defy, bearish technicals. But when the momentum stops or goes the other way, those traders, they run like roaches when the lights come on in the room. They exit those trades quickly, and you can see a big 35% drop down into the March lows on that ETF. So, well, what stands out, we had a minor uptrend line here, and you had a drop right there, pretty good correction. And once again, you have another minor trend line recently broke, and there's several nothing but red sticks so far, all red candles since that breakdown of that trend line. And also, you can box it in this way. You can say that's a recent trading range. It started about right here. The bottom of that range, about 138, is support. There's the top of your range right there. And with most ranges, I can draw a midpoint line, and you often get reactions around that midpoint. In other words, it acts as support. And once you break it, then you tend to go to the bottom of the range. The top of the midpoint of the range will act as resistance. It went up, rejected, back down to the bottom. Finally, you broke out, and once you break above, you tend to go to the top of the range. So this would be your first potential support level, about about 146.75, the midpoint of the range. And if that goes, then you would expect to move down to the bottom of the range around 138. Okay, that's the ETF, and really not the main point of the video. What I wanted to focus on are some of the recent, again, call them crowd favorites, beloved stocks. And I'll start out with, I don't even know, let me see if that's a component of this. I don't believe it is, but the Peloton, PTON, covered that first yesterday. We had a couple inquiries in the trading room about it, and mentioned that as a trade setup. I've added a couple levels to this chart. No, not this one. I have another board I did. But on this chart, what I did is ever so slightly tweaked. I tightened up that trend line that I showed you in yesterday's video, as well as the two charts I posted today. And what that would do is give a breakdown yesterday, but non-impulsive. Either way, this is how I had the trend line today, on the charts that I showed you. And then you could certainly use that. I just tightened it up here. Why? Because that gives me more reactions. I like a trend line. The more reactions you have, we'll count them here. 1, 2, there's one there. That's 4, 5, 6, and very close there. You can call those if you want. These are, full-on tags. Lots of reactions there. Either way you slice or dice it, I have it now moving it clearly below the trend line with an hour and a half in trading in the day. Anything is possible. And again, if you rally up strong and you want to say, give it the benefit of the doubt, put the trend line right here, maybe you close back on the trend line. But as of now, it's looking like we're probably not going to get that, especially if you draw it that way. So you have not just the trend line break, you also have the PPO making a bearish crossover for the first time in a while. You're also coming off overbought readings, just like you were back here. And then I gave you guys a 60-minute chart. Again, on one hand, I am telling you I expect a lot more whipsaws and volatility leading up to the elections. So that's why you have to I was going to say take every breakdown with a grain of salt, but put the odds in your favor. I think a solid break below this level right here, about 126, should do the trick. This is a 60-minute chart, so you already have the trend line, which was broken and back tested on the 60-minute. And but there's price support. There's numerous reactions there so far, including today. So we're down. From where we're at now, stock's down 4%. If we drop another 3, 4, especially 5% from here, that should do the trick. There's a potential uptrend line that comes into play. You could probably make it out right here. That's a potential target on the 60-minute chart. But the target, you could also say right around where I have support on the daily chart, just above 100. Again, that's the sole target, a little bit above 100 right here with the uptrend line, around 100. Okay, now according to my watch list, this charting platform TC2000 has a feature called related items or components. When you click in an ETF like MTUM, it'll show you all the components. So I'm assuming that list is up to date and accurate, and I don't see PTON in there, Peloton, but I do see these stocks. And now, keep in mind, I have these sorted by decliners. So this is the biggest decliner in the ETF today. It's Netflix. They reported subscriber growth has slowed. And my quick take on the chart is you can see the boxed in range. If not, let me make sure you do. This is a recent trading range we've been in for months now. We entered this range back in June. And there's the top of the range. You can see we get up there, and then there's the bottom of the range. Lots of reactions on the bottom. And like every range, I can add a midpoint line, or most ranges, and see that those are the levels. Once you break the midpoint, you typically head to the bottom. The midpoint is resistance. You ran up to it, rejected, then you took it out here, and you didn't just limp above it. Boom, big green candle, solid breakout. That took you back towards the top of the range. Fell back below. What happened after you fell back below the midpoint? Back to the bottom. What happens when you broke back above it? Back to the top. We just broke to the bottom. This increases the odds now that there's more downside to come. And I do this maybe for those of you looking to buy Netflix on the dip. Big move off the highs, down another 6.5% today, and that's following the recent selling. But I see a breakdown here. There was your first warning sign before earnings. Big red candle, breakdown below that uptrend line. Nothing but red sticks so far, and boom, we gap down below the midpoint of the range. So your next objective entries would be a bounce back to the midpoint, or maybe we continue on down to the bottom. I don't know if you'll get the bounce back. If you do, it's objective. There's also gaps. You might pierce it intraday. Keep in mind, since the gap is just above it, here's your gap. That's really where you'd want to have your stop a little bit above that gap, not above the midpoint if you're short now or plan to short Netflix. And again, that would be your minimum target, move down to the bottom of the range, which gives you another, from where we're at, about another 5%. And of course, no range lasts forever, so ultimately you're going to break above or below, and that will most likely determine the next trend. If we break down to the downside, I think we come all the way back here to 394, so right there would be a downside target. If you break to the upside, well, there's no overhead resistance. That'll be an all-time high on Netflix, so I don't have any price targets, but typically you'll go up at least the distance of the range, and you can measure that out and give yourself an upside price target. But the fact that, like everything else, we've been diverging, negative divergence, as we got that most recent high, bearish PPO crossover in play right now. I think there's more downside on Netflix. And part of the reason I wanted to do this video is, again, these are the momentum stocks, the high flyers, crowd favorites, and we have an election coming up, so it only stands to reason that we might see some profit taken, a little nervousness before then. Why not? For those that had ridden Netflix all the way up here, why not take a little off the table now? That's my mindset. But again, this market is anything but rational, so sometimes you think things are going to go one way, they go the complete other way. I'm showing you what I see in the charts, where I think the stock is going near term and longer term, depending on which way it breaks from this range. Next one up, and I'm just going in order. I don't have all these charts marked up. This is the second. As far as how far they're down today, the components again of MTUM. This one's work. Slack Technologies, and so far it's in a downtrend. It has been for a while here. So here's a stock that rocketed off the COVID lows, 170% or so, and it's been walking lower recently, gapped down below this trend line, and here's a rough price channel that I just drew, and that would be a logical target in the bottom of the channel from where we're at. Next one up, CRWD. That is CrowdStrike Holdings. You can see, just heck of a run off the COVID lows, 378%. A lot of momentum in that stock. But again, the common theme of this video is I'm seeing the momentum breaking right now. I'm seeing a lot of these stocks, a majority of these stocks, recently breaking down and starting to build up momentum to the downside. And as I said, momentum stocks are great when the momentum's going up, but when the switch flips, and all of a sudden the momentum goes the other way, it can go, they can fall pretty fast. So where does this one go? It wasn't the point of the whole video isn't to give you all trade ideas on each and every one, but I'll throw out some rough targets because I imagine somebody listening to my voice owns or is considering this stock, whether long or short. And there's your two price targets, 117.85 and about 93.50 if that level gives way. All right, next up, and of course I showed you the divergent high right there, negative divergence, trend line break. That's nice sell signal. I wish I would have saw that one the other day. I would have shared it with you. In fact, most of these I hadn't looked at until today. DDOG, Datadog, another high flyer, a component of MTUM. And let's draw this trend line like this. Starting to crack right now. Big old divergent high right there. Negative divergence has been building for a while. That divergent high right there, it's not as if the divergence didn't work or didn't play out. It did. It had a big drop right there. That drop measured from high to low about 25%. Bigger divergence at this point in time indicates even a bigger drop. I wouldn't be surprised if we really get some downside on these momentum stocks if this one comes all the way back down to that level there. But some interim targets, or earlier targets I should say, would be about right there, those three lines I just gave you. DOCU, DocuSign, obviously another big beneficiary of COVID. I bought a house and selling another one since COVID hit, and that's what we use, DocuSign. Super convenient, sign documents online, no more back and forth, no more faxing like the old days, and no more face-to-face stuff. And so it's been a beneficiary. But again, how much of this 100 or 330% rally has been priced into the stock? That's the million-dollar question. And you can see it's already come off that high. And that high, by the way, was a big old divergent high. So there's a stock that peaked so far and has dropped as much as 33%, set up this minor downtrend line, and it's starting to crack there as well, or did crack that already. PPO is also poised to make a bearish crossover. So here's another one that looks like it's heading lower despite the correction it's already had. Zoom, I covered this one yesterday. I had an alternative trend line. I had this primary trend line here, or we'll just call it an uptrend line that we broke down and back tested right there. And then I had this secondary trend line, which we're starting to crack as of today. So again, my common theme, reason for this video, I'm seeing a lot of momentum stocks starting to crack despite a stock market which is holding up today. And so when you start seeing these momentum traders jumping out, you got a lot of Robinhood traders in these stocks, things like that. Although they're they're selling fractional shares or not large lots, it can add up. And again, of course, there's not to say it's all retail traders. There's certainly, I'm sure, institutional investors in these, and they have to be thinking the same thing I am. What are the elections going to hold? What's going to happen after that? Where we're going to be going forward? So I can think of no better time to book some profits on Zoom and things like that for those that have been in this stock for quite a while than right now. And the technicals say, we're breaking down. There's a breakdown today. It's a sell signal, call it what it is, unless we somehow reverse into the close and regain that trend line. First stop for 457.50. Second stop about 344, 345 right there. Next up, OKTA, another one that's Okta. I don't even know what that company does, to be honest with you, but it's in the Momentum ETF. Broke down and it's moving down impulsively lower. We haven't seen selling like this for a while. Last time we saw impulsive selling was here from top to bottom. That was a correction of about 19%. and we have a bearish PPO crossover in the works as well, and we're also coming off overbought conditions as well. So breakdown, overbought, bearish PPO crossover indicates more downside to come on this one. SPLK, Splunk, there's your nice clean up trend line. This one broke down actually back on the 14th. Little kickback rally, been trading sideways, and I think as soon as it breaks below that recent trading range right there, that should open the door for a pretty swift move down to 190.26, give or take, and then if that goes, 171 would be your next target. TDY, I don't have all these marked up, nor did I plan to go through all these. The rest of these are, some of these have already, momentum is clearly turned. I just wanted to go over those top ones that were down pretty big today. That. Okay, I'll just wrap the video up here, and since it was a short video, throw in NQ, another update. Same story, we're bouncing around this trading range. It's pretty tight, pretty well defined. We've had two brief whipsaw signals, as I mentioned earlier today. But that's been the MO. Top, bottom, up, down, up, down, up, down. Sooner or later this will break. Like I said, about the one guarantee right now in the market, or one highest likelihood, is just an increased chance of whipsaw signals and volatility. You still have the divergence, I mentioned that, but the fact that we keep failing the upside breakouts is not a great sign. It's showing the sellers keep stepping in. But as of now, we're still coming off those oversold readings and still have the divergence. But again, I said it earlier today, you're probably going to get whipped to pieces trying to trade the indexes heading up to the election. So you might want to focus on individual stocks like some of the ones I just went over that have their own technicals. And although they may be a component of the NASDAQ 100, Russell 2000, S&P 500, they're typically not top components, so they're not going to have the selling pressures. I mean, if you chart Apple against NQ, tick by tick, I mean, they're going to move together because Apple's a top component. But when you get down to those smaller components, there's not as much of a correlation there. So, all right, we'll wrap it up here and get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.